Hello and welcome back to Core Finance. I'm Matt Brown. This is the second video today with a good friend of Core Finance, John Eade, who is the President and CEO of Argus Research, joining us from the US of A. Welcome to London. Thank you very much again for coming on the show. Now, specific stock picks in the US. We're going to talk about a few particular stocks that investors and viewers should potentially be looking at, and this on the back of a recent research piece you've done. Can you just explain to us the headline of that research piece and talk us through a few specific stock picks?
Sure. Matt, the idea is, the real idea here is double-digit dividend growth. Mm-hmm. Not earnings growth, but dividend growth. In fact, earnings growth, we're coming into third quarter earnings season, and I do think we're going to see double-digit earnings growth. That's great. But the companies that we're really focused on in this research report and in some of the portfolios we build are companies that increase their dividends at least 10% for 5 years or more. It's a real select group of companies, listed in the New York Stock Exchange. Out of the 3,000 companies in the US, there's probably only around 150 or so that have that kind of double-digit dividend growth record.
Fantastic. And are there, with regards to these stocks, are they in a specific sector, or are you finding across the board there are these double-digit growth companies?
We're able to find them across the board. Mm-hmm. And there's really three, I think, important signals that come from this record of dividend growth. One is these companies have strong enough balance sheets in order to pay a dividend. Two, they're focused on shareholder returns, so getting money back to their shareholders by paying dividends. Of course, not every company in the U.S. pays a dividend. And then three, despite all that's going on with are interest rates going to rise? How strong is the U.S. economy? These are companies that are confident enough in their business outlook to increase the dividends at least 10% a year. So you've got those three factors going for you when you're looking at these companies, and they do span industries. I'll touch on a couple of them. In the consumer group, a couple of ideas that we're looking at are Home Depot, the big home improvement company that's done very well, and Hershey Foods, the chocolate company that also has a real focus on dividends. You move over to healthcare. And Amgen, I think, is an interesting story because I'm sure, more than half of its life, Amgen was a fast-growing biotech company and never paid a dividend. Well, they're bigger, they're still growing, not as fast, but they're very focused on paying dividends, and they've got a great pipeline. And then the insurance company, United Health Group, is another double-digit dividend payer. In the industrial sector, a lot of large cap, well-managed companies in the aerospace defense area. Boeing, Lockheed Martin, and General Dynamics all are consistent dividend payers, and we're looking at for the portfolio. In finance, you don't find it in banks very much, especially coming out of the recession. There were dividend eliminations and no dividends at all. But if you look at some of the insurance companies like Allstate or some of the exchanges like CME Group, they make the cut. And then lastly, in technology, not a lot of people go into the tech sector looking for dividends, but certainly some of the larger and more stable tech companies meet that screen that we have. So, Texas Instruments is one that we particularly like, the double-digit dividend growth.
Fantastic. And, certainly at the moment, if you're looking for income, or even defensive stocks, it's good to be looking at these particular companies in these markets, in the markets. S&P reaching record highs, Dow reaching record highs. If you're looking maybe at defensive plays, certainly these are stocks that you potentially should be looking at.
Well, right. So you're at least grounded in some valuation if you're paying a dividend. You're not going to be at those nosebleed, 20 times price to sales or 50 times PE. I think the average dividend yield in this portfolio that we've screened for is about 2.3%.
Okay, so not incredibly high, but still a good return when you look at interest rates at the moment and returns from the market.
Correct, and also these are companies that are investing in their businesses, and the stock prices are expected to rise too. So it's not just an income idea.
Understood. Well, lots to think about, lots of good names there for our viewers, and I'm sure they'll appreciate you mentioning them, and I'm sure they'll go away and do their homework and hopefully benefit from investing in these companies. John Eade, CEO of Argus Research, thank you very much for joining us today.
Thank you, Matt.